Hey, welcome to the Black and Brown Home Ownership Podcast, where we break down the barriers of home ownership for people of color and empower you with the knowledge you need to achieve your dreams. I'm your host, Khalid Nathan Alim, the real estate boy, and today we're diving into a topic that's on everybody's mind. Buying a home in this crazy market. So, whether you're feeling overwhelmed by rising prices, rising interest rates, or worried about not having enough money for your down payment, you're in the right in the right place. So in today's episode, we're joined by Shad Hammonds, who is a real estate expert, a real estate officer for Loan Depot. He's a seasoned loan officer with years of experience helping people navigate the mortgage process. So together, we're going to uncover the strategies that you can use to buy a home with little to no money down. We'll talk about down payment assistance programs, how to stay competitive in this hot market, and how to make your dreams of home ownership a reality, even if it feels out of reach. So, if you're ready for practical advice that can help you take the next step towards home ownership, stick around. This episode is packed with insights just for you. How's it going, Shad?
All is well. Glad you asked because I can't wait to share actionable things that people, if they watch this, that they can leave as soon as they, the Zoom or the recording ends, the clip ends, that they have actionable things that they can do that they know that will produce results, right? And make something that's so daunting more again of a reality, like you said. So we start with those dreams and goals, and then we actively do something to make those dreams and goals again a reality where you got keys in hands. And we have done this dance a number of years. So, can't wait to jump in.
Awesome, awesome. So just so everybody knows, this is part of a bigger community, Black and Brown Home Ownership Academy. So in this academy, you'll have community. You'll also have direct access to real estate professionals. Okay, so you definitely want to jump in there. I'll let you guys know a little bit later on as far as how to get access to that. But we want to jump in here. And again, our reason for being here is that we want to help Black and Brown individuals acquire a home because they say
Close the gap.
close the gap. And why? Because this is the so-called American dream. Most people biggest asset is their home. So if you don't have a home, then that means what? You're kind of left out there. And if you're renting, here's the thing, here's the misnomer, is that people think because they're renting, they're not paying a mortgage. They are paying a mortgage. It's just somebody else's mortgage. Okay.
Somebody else's mortgage.
It's somebody else's mortgage. So that person, if you're renting, okay, and renting has its place. Renting definitely has its place. But if you look at people's wealth, it usually comes from this biggest asset, which is their home. So we want to get as many people into homes as possible so they can participate. And that's the thing. So they can participate in the market going up, man. So I'm going to throw some questions at Shad. And we're going to both kind of dive into it because, again, our goal is to help you guys prepare to be first time home buyers. So, Shad, the first question that I'm going to ask you is what are some of the most common down payment assistance available for first time home buyers, especially in this market?
Okay, so let's talk about who we serve first. Because even
Mhm.
though this collective that you were building is going to be, multifaceted. It could be somebody from Tennessee watching this. It could be somebody
Nationwide.
from Florida, nationwide, right? So, but starting here and then out, right? So every state typically has a program. Every county has a program. Typically, every city has a program. Now, you and I both serving Philadelphia predominantly. So we know obviously there's frequently used programs like the First Front Door or the Philly First grant. And then our state of Pennsylvania has a whole finance agency, right? And so right in Harrisburg, PHFA, they have a number of programs for not only buying a home, but also renting a home, also maintaining your home once you do own it. So they offer a series of different programs, but one of their more frequently used programs that you and I have used in the past is called the PHFA. So that's the Pennsylvania Housing Finance Agency. If you are looking to buy a home, if you currently own a home but want some resources that can help with you, or even again, if you're renting, looking towards buying, that's a website that you might want to visit, phfa.org. And so again, it's a whole agency fresh out of Harrisburg, state driven, state backed, that allows for buyers on the very first step of ownership, looking to get in. Their K-Fit program has been monumental, helping thousands of home buyers acquire 5% of the purchase price to be able to put towards their down payment and their closing costs. So again, 5%, it's really big if you're looking to put the minimum down and you're just starting out as a homeowner. So um, where we serve, again, PHFA, we got Philly First, we got First Front Door, we got Turn the Key, which is a new program out there for, started out just as Philly um, city workers, right? If you work for the city, if you work for the area, but then they've now opened that up, and as long as you meet some of the qualifications for it, you can buy a brand new home, have a rate much lower than where the market is, and also have a mortgage payment and down payment assistance, where they've opened that up from anywhere between 25,000 to, I hear the max might be up to $70,000, where you can buy a house, you can buy down the interest rate, you have closing costs, you have down payment options, and they have the homes that are turn the key homes, and they have turn the key lenders. You got to go through a participating lender. But if you're a city official, city worker, right, working here, city sanitation, healthcare, or police and fire, if you're working here in the city, living here in the city, they have homes designated for the turn the key program. Something that you want to look out. Information is easy. And again, the lenders are really, really good. TD Bank, I believe Prosperity. There's a couple lenders that are with it. But I mean, there's so many programs. And again, that's just naming Philly. Real quick, because again, we got plenty to cover. If you are in New Jersey, right? We know the NJHMFA program has anywhere between 10 to 15,000 for first time buyers or first generational buyers.
Mhm.
And there's different programs where you can layer and stack some of these grants on. So again, that's New Jersey NJHMFA, right? Another good website. You Google it, you'll find tons of information. You got to go with a participating lender, and more preferred, you work with someone like Khalid, where they know the ins and outs of a transaction. They know the ins and outs of down payment assistance. And when you bring it up as a consumer, it's not shied upon. Because don't be surprised if not everybody wants to work with these programs, whether they're a realtor or a lender, right? Some people are like, oh, you're using that stuff, because it adds time and work. Some people don't want it to add time or work to any process, right? But when you are working with lenders and agents who are comfortable in this space, and that's why you're here today watching this, you know, there's ways to minimize your costs, because after Khalid and I are done, there's still a house to maintain, right? There's still a water heater that may go on you, a roof that leaks. So your money is best off in your pockets, more power in your pockets, right? And we want to keep that money there. And obviously, Delaware, kissyourlandlordgoodbye.com is a good place to go for Delaware. Delaware has their suite of programs. There's several now. Delaware Gem Program, the DSHA, as they have DSHA, Delaware State Housing Authority, offers a number of programs. So I mean, that's just in our tri-state. Khalid is licensed in all three states. But again, this thing that he is building is going to be global. So, if you want to know about Maryland, or if you want to know about Tennessee, if you want to know about Georgia, the Georgia Dream, I could go on for days in terms of programs and things that are here to help the first time buyer.
Right. I think what Shad is pointing to is it's not a one size fits all. So I'll get a call a lot of times, and they know that there's money out there. Buyers, first time, they know there's money out there, but it's not a one size fits all. As Shad was saying, that's why it's important to work with individuals who are sensitive to the industry, to this particular section of the industry, because there's some people who are not, and their business model isn't really set up like that. Their business model is set up for you to have everything in order so that you can just come in, get the loan, and out the door. Okay. Their business model isn't set up to be sensitive to people who need down payment assistance for whatever reason. Well, the thing is that ours is, and this is what we focus on. So, um, your particular situation, you would need to sit down with a Khalid or a Shad to see what's my situation and what's going to be the best route. Because when talking about down payment assistance, I usually try to break it into three tiers. You have the local level, you have the national level, or state level, I should say state level, and then you have each, not every lending institution has a first-time home buyer program, but a lot do. A lot do. And they vary from lending institution to lending institution. And here's the thing, some of them can be stacked on others. Most of them can. Okay. Most of them can. And we won't get into that right now. Most of them can't be stacked, meaning combined. But there are some that can. That can be the difference between you having to bring $10,000 to the table and getting $2,000 back at the table. So it is more complex than a one size kind of fits all. That's why it's important to sit down with a lender like Shad or an agent like myself who is sensitive to this particular area. So let's move on to the second question. My second question for you, Shad, is for buyers looking to put little to no money down, what types of mortgage products are best suited for them? Such as, is it FHA, conventional, VA, USDA loans? Can you explain some of the pros and cons?
Good question. Good question. So we know that, like you said, there's a number of ways to skin a cat in this process. No two processes are the same. There's nobody that can say, go talk to Khalid. I did this. I bought the house at this amount. I got this amount down. I got this amount of seller's assist. Go call him. You'll get the same thing. Like that'll never happen, right? Your deal is not someone else's deal, right? Your process is not someone else's process. So you might be a veteran where I might not be. If you are a veteran, you know there's so many different benefits, whether they be health benefits or retirement benefits or even housing benefits. So the veteran out there that served that can produce a certificate of eligibility at DD 214 can show that they've served and they're entitled, and they have that VA entitlement, as they call it, to be able to use a VA loan. Well, you're looking at the best loan product in the world, right? You're looking at a product that if you can secure a VA loan and then secure a home, you're looking at a process where there's no down payment, right? So you don't have to have, a down payment in the process. You're simply only paying for closing costs. And closing costs typically on any transaction, generally speaking, regardless of what part of the country you're watching this from, could be anywhere between 3 to 5%. Somewhere in that range. 6% is getting a little high, but somewhere in that range. And again, those are third-party fees and costs that Khalid and myself cannot control. There's services and things that happen behind the scenes, third-party services that are just part of the process of acquiring a property. Well, you're simply only paying for those, but not paying a 3 or up to 5% or 20% down for your loan as a veteran. And again, you've earned that through your level of service and what you've done. And so the country, Uncle Sam, gives back and eliminates the down payment, but also eliminates what is called mortgage insurance. So there's a couple benefits that a VA loan will typically have. And most lenders, their veteran rates are actually probably the lowest that they provide, right? So their down payment, no down payment. Their mortgage insurance, no mortgage insurance. And then obviously, VA rates are usually more competitive than most of the rates that are out there. Why? Because again, that person served, right? Or that person's the spouse of someone that served, or that person is a surviving spouse of someone that serves. And so that's you got to be veteran and spouse, surviving spouse, but to use probably the best mortgage program out there. Now, USDA is also another program for those who are buying in a semi-suburban rural setting. It is map based. So you'd look at a map and you'd see all the places I can or cannot use a USDA loan. Much like an FHA loan, it does have low credit criteria where typically it's down to 580. You would have mortgage insurance on your mortgage, but also rates that are competitive and no down payment, much like a VA. So it's kind of the best of both mortgages, right? So I got my no down payment from the vet, but also have, very tolerable, very relaxed or less restraining um, acquisition guidelines or purchasing guidelines with the credit score, higher DTI, and things like that. So that's my USDA. VA, USDA, no down payment. FHA, let's move on quickly. FHA, 3.5% down. So what they mean by that is 3.5% down of your purchase price you put aside for your down payment. That's the FHA. People like the FHA, especially first time buyers, especially where we serve, because again, as a first time buyer, you may not have a long list of trade lines and this long, lengthy,
Mhm.
experience with credit. Maybe your credit scores are not where you'd like them to be. Well, FHA, Federal Housing Administration, allows for a lower down payment, 3.5%, and are more tolerant, more accepting of someone that may have a story to tell, right? When it comes to their credit scores, or again, they need to take on more debt, so they're higher DTI requirements versus, some of the conventional loans where they may be, where as low as 3%, if you're a first time buyer, you have really good credit, you can put that as low as 3%. So even lower than the FHA. Um, Lending guidelines are not going to be as tolerable. They want you to be a little bit lower in terms of your debt versus your income ratio. But again, you're looking at as low as 3% for a conventional loan, typically higher credit scores on those as well. So we went from 3% conventional, 3.5% FHA, and then we have two programs, USDA and VA, where there's no money down. You're only paying for closing costs. So that's the suite. That's the big four. And depending on where you fit in, because nobody's process is the same, FHA might work for you. You might want to borrow more money, and you may have some credit issues from the past, right? Or you may want to do conventional, where you want to be compensated and acknowledged for having really good credit, or strong credit. Maybe you have access to more assets on hand, but if you're coming in prepared and your credit is good, you can do a conventional loan as low as 3%. And then obviously, again, for our veterans, we have the veteran loan, and then we obviously have a USDA loan that you want to look into if you are somewhere in a rural setting or a semi-suburban setting.
Gotcha. Now, what I really want you guys to take from that is that you have the first time home buyer programs, which are different than the actual loan programs. So these aren't the
Mhm.
same thing. These aren't the same thing. Okay. I know a lot of first time home buyers, they may get confused by that. Okay, I want the first time home buyer program. I want the FHA program. These are two separate things. Two separate things. You have the loan itself, which Shad was talking about, as far as the type of loans, the type of different mortgages, conventional FHA, VA, USDA. Okay, these are different types of loans. Now, when you're talking about down payment assistance, these are different because you got to get the loan first. Okay, you can get the first time home buying program, but if you can't get the loan, then we're really not talking about anything. Okay, so you got to be able to qualify for the loan. Once you qualify for the loan, then we say, okay, do you qualify for the down payment assistance? And the down payment assistance can be a grant or it may be a forgivable loan. So there's different type of down payment assistance. So they're not all the same. So just want to point that out to you guys so you guys understand when we're talking about types of mortgages are different than the different first time home buyer programs. Okay, those are totally different. So moving on to
So
the
true.
moving on to the third question. Third question that I have for you, Shad, is how does a buyer qualify for down payment assistance, and are there income or credit score requirements that they need to meet?
Good, another good one. All right. So typically, again, every program has its own guidelines, its own requirements and level of eligibility that you have to meet to be able to use it. I always say, and it's odd because, I'm not in the office. I've been sick this week, so I'm working from home. I'm in my kitchen. I love the lighting in this kitchen, bright LED lights, right? I'm in the kitchen. And I always say to the buyers, I say, hey, look, Because like you said, they're two different things. The loan product, the loan you're using, and
Mhm.
then down payment assistance, they're not one and the same. So now, Shad may say you're qualified for a home loan, right? But you say also, hey, look, what are the type of programs that are out there? I'd love to use a program. So now we're asking another cook to come into our kitchen, right? And when we include other cooks in the kitchen, that kitchen is now crowded, and that cook might have his own rules,
Mhm.
his own ingredients he might want to put in the food, his own cooking directions and stuff. His stuff, the way he makes his mac and cheese might be a little different than the way you make your mac and cheese. So when again, shop might say, hey, your maximum amount is 250, go ham. And you say, all right, well, I also want to use a program. Screech and Halt. Your max now might be 225. Well, why so? Well, that other guy, the other cook in the kitchen, that down payment assistance program that you would like to use might have some more tighter, stricter guidelines. So let's talk about it. So certain programs may have DTI restrictions, where again, that's why the difference in price point. Shah said, go for 250, go knock them dead. And you're using a certain program like the Georgia Dream, or you're looking to use the Maryland Mortgage Program, MMP. They may say, hey, 45% DTI. When Shah looks at that, or a mortgage professional looks at that, that 250 might come down to 230, right? It might come down to 225 because of tighter lending guidelines. They may not want you at your maximum, because again, now a lot of these programs, since they're working in on a nonprofit level or state level, county, city level, they don't want to have, I hate to use a term like this, but blood on their hands if you can't pay your mortgage. And you say, well, who set them up for that loan? Who set them up to fail? Well, Shot did, but then also the state of Pennsylvania did too, because they allowed the loan to come out where the buyer wasn't really truly qualified to take on that level of debt. So debt to income restrictions, be prepared for that. Again, your lender may say you can be here. Once you include that extra cook in the kitchen, they may knock you down a couple pegs. Not to be mean, but they don't want to take on extra risk. And they want to see as a first time buyer that you're not buying at the top, tippity top of your budget. They want you to be at a much less riskier loan, if that makes sense. So you'll see DTI restrictions. Um, Sometimes there's going to be credit score, right? Because again, if this nonprofit or this state driven program or this city program is going to take on and kind of co buy this property with you with their funds, they may say, hey, look, I want to only buyers at this level of credit. So you'll see 620 mentioned in certain programs. The K-Fit that we mentioned previously, that's 660 to play ball. You may say, gee, 660, I can't get there. Well, we'll help you get there, right? Khalid, he doesn't mention it a ton, but he also does credit repair, right? That's another hat that he can wear. So, we can help you get there, but you also want to know again, what are the eligibility requirements? So credit score and DTI are typically the two that you'll see the most. It may be location, maybe proximity. Those are other things as well. But usually is a credit score DTI requirement. If you got the credit to use it and what you're trying to buy doesn't produce you to be at a DTI or generate you to be at a DTI that's higher than their restrictions, then more than likely you can use that program. It's usually credit run, DTI run. But also look out for proximity, right? Can't use a Tulsa program if you're buying in, New Jersey, or it doesn't make sense, right? This is a program for Tulsa residents. You're in New Jersey. How are you going to use that, right? So proximity and location are also things that are key. Income limits, right? You know about those as well. You can't sometimes make, as a household, 250 grand and expect to use down payment assistance, right? Also, another one would be um, money that you have on hand, right? If you got 150 grand in the bank and you want to buy a house and you want to get 20 grand from the state, they may say, "Hold, why are you getting 20 grand from us when you got 150 large in your bank account?" So, assets on hand, how much money you have access to, can also push the needle of whether you're qualified for a grant or not. So, it starts pretty much with credit and DTI, but it could be things like location, income limits, and things like that.
Gotcha. Okay, so just to kind of reiterate what Shad
Hmm.
said, as far as, okay, the loan may have a certain set of standards, okay? And the DTI, for those of you who don't know, is your debt to income ratio. So when you're turning in your financial documents to Shad, it's gonna show that you can afford a certain amount. Okay. And then when they pull your credit, it's going to show certain creditors that you owe on that. So that's your debt. So what debt do you have? So really simple, there's a ratio as far as they take your income and they take your debt, and that produces a ratio. Okay. So for example, if your income is $1,000 and your debt is $500, now you're at 50%. Okay. So
Mhm.
meaning that half of your debt, half of your income is going to your debt. Okay. So the loan may have a certain threshold, but then you have the down payment assistance program also, and that has a certain threshold. And that threshold might be lower than what that program, that mortgage program is. For example, the FHA or conventional. So what you may find yourself is depending on the program, the product, the mortgage product might say, hey, we'll give you $300,000, for example. Okay. But that's just for that loan program, FHA, conventional, USDA, or VA. They may say, hey, we'll give you $300,000 to buy a home. But then you use this first time home buyer program and it may bring it down to 250 or 260. Okay. So just want everybody to be super clear on when we're talking about qualifications for down payment assistance. The lender, meaning that mortgage, is going to have a certain set of qualifications, and then that other down payment assistance program may have some qualifications also. So we have to come in under that. So let me go to number
That's
4.
that's a good point, man. That we run in that trouble all the time.
Right,
You
right,
know,
right, right. And the only way, the thing about it is really the only way to see is to get in the game, is to contact a Shad, get pre-approved. Because a lot of people think, oh, there was a statistic that I saw. They said that like 80% of first-time home buyers are eligible for some type of down payment assistance program, but only like 13 or 15% actually take advantage of it because a lot of people don't think that they can qualify. I've seen
mhm.
programs where there's no income limit, where there's no income limit. So that means somebody can be buying $1 million property and they can get down payment assistance. Or what some people do is they'll say, okay, well, I'm going to wait, and that's fine. And you want to wait to get your credit score up, and that's fine.
Mhm.
But I've seen people wait to get their credit score up, and the interest rate goes up also. So now they just kind of cancel themselves out. That's not really what I tell my clients to do. What I tell them to do is get off the sideline, get pre-approved, see what's out there, and see what you can do. And then we can circle around because now we're talking about real numbers, and we're
Yep.
we're not letting things in our head kind of push this off for us. So in any case, Shad, my next question is, what role does a loan officer play in helping a home buyer find and qualify for these down payment assistance programs? What role does the loan officer play?
Got it. So understand that again, we have mentioned on this call more than one that we are comfortable working in where is not only are we helping you find a house, not only are we tailoring a good financial fit for the house you're looking for, but there's a level of service that is extended when you step in again to this space of trying to find your buyer ways to minimize their cost to make this a reality, right? So it's just an extra level of care because it isn't typical that you find an agent that knows these programs or wants to work with these programs. Same thing with the lender. There's a lot of lenders that may or may not know about these programs, but again, may not want to work or does it work with them well because they just don't work with them often. And again, if everybody walks into your office with 800 credit and 20% down, why would you need to know much about these programs? Right. But that's not who typically my buyers are. And so, as a lender that works in this space, they should be able to discuss the basic eligibility requirements to get a home loan first and foremost, but then they may go that extra step of enrolling you or scheduling in you into a program that would help you with your home ownership counseling. Because most of these programs, one thing that is consistent from New York to LA, right, from Washington State to Miami, is that most of these programs do require you to have some HUD level training, right? Some HUD level of counseling, meaning housing urban development approves this home buyer's course. And if they approve it, they'll give you a certificate that says you had a couple of hours of home ownership counseling, and you are now able, as long as you meet somebody's requirements, but you're able to use the program. Because most of the programs, as you, the buyer, have you had any counseling? Have you talked to anybody else besides Rashad and Khalid? Right. And if you have, show us that you did. Well, you can show them a certificate, right? And it'll say HUD at the bottom, whether it's Jersey, PA, Delaware, Maryland, wherever. But your lender most often should help you. Shouldn't just say, hey, this is the program. See me in 2 weeks when you get your certificate. No, they should help you get enrolled. Maybe they know a counselor down there. Maybe they can help push you through the program a little quicker. But it's again, when you're working with people that are comfortable in that space, they should be able to say, hey, look, talk to, Chris Keogh. Me and you did a deal with Chris Keogh years ago. Chris Keogh's the director of GPAS. That's a counseling agency in the Rising Sun area of the city of Philadelphia. Director. He'll get you in and out of there quickly. Just let him know you're working with Khalid. Let him know you're working with Shad. But it's just that extra push. So your lender again teaches you about how to get your regular traditional home loan, FHA, conventional, USDA, but he's also navigating, hey, here's what you got to do. You got to have this score. You got to have this, this income. Oh, you make too much for that program, but hey, here's another program that you don't, so they're walking you through because to use these programs typically requires some coaching. It requires you knowing a guy, right? Having some resources that, again, if your lender is just a traditional mortgage banker, don't expect to always have access to these programs if they don't work in that space. So it's just an extra level of care. That lender should know how to qualify for that program and walk you through it. Good question.
And that's super
That's a good
important.
question.
It's super important because the lender, it's extra work. It's extra work. And the thing about it is, if you're like Shad was saying, if all of your clients are paper files, and for example, let's just say that you work like out of a Bank of America, for example, okay? A lot of the lending officer at Bank of America, they may be on salary and they're just getting people coming in, coming in, coming in. For example, I had a couple of years ago for PNC Bank. I had a guy, my guy was trying to buy like a $300,000, $400,000 home. And we're trying to call this loan officer and he's just not answering. He's just not getting back to us. Well, he works for PNC. He's probably getting all of this business, $1 million loans, and our little $300,000 or $400,000 loan, it's not worth his time. So I know a lot of times our thought process is, okay, I want a loan. Let me go down to my local bank. You go down to your local bank, they're going to give you a phone number to somebody in like Idaho. Okay. Or it may be somebody in the branch, but that person may be on salary and they're just getting these $1 million. So you come in with your $200,000 or $300,000. They have no idea about first-time home buyer programs because they don't deal in it. That's not where their focus is. And
Mm-hmm.
and again, as I was saying, these down payment assistance programs, they are extra work. It's extra work for the lender. So and that's the reason, one of the reasons why I came up with a Black and Brown Home Ownership Academy is because I want to empower you guys. I want to empower you guys on what to look for because it's just about knowledge. The thing about it is we're already paying the mortgage. It's just disguised as rent. And you go and rent just keeps on what? Just keeps on rising. Every year it keeps going up and up and up and up. And that's going to a mortgage. That's going because somebody owns that building, but it's not yours. And that's what I want to empower you guys with is the information so that you can buy your first home and get out of renting and get into owning, which is ownership. So let me go to the next question I got for you, Shed. Um, My next question is, in a competitive real estate market, how can a buyer using down payment assistance remain competitive with their offers?
Mm, that's a good question. That's a good question. So some of that, couple things. And you triggered me first, so I got to remove my mind from the
Mhm.
last thing. You triggered me with the bank thing and the PNC thing. So let me remove my mind from that because, when you mentioned that guy in the bank, all I just thought about was, there's a lot of people that work in these banks that you need TLC. You're the first time buyer, you're coming in, you need all sorts of stuff, down payment assistance, but you don't have a clue about how this process works. And then there's one guy behind the counter that's now got to put on his mortgage hat, but he just had his auto loan hat on and he just had his, direct deposit,
Mm,
and then he also had to produce a couple ATM cards for these new guys that just open up. So you're working with somebody that unfortunately might not be as invested in this process as again people that are full time and they only do this, right? And so for me or someone like me, this is it. It's all I got. Home loans. I don't got an auto loan for you. I can't get you an ATM card to do direct deposit for you. So just that bank thing and that level of expertise. And again, that's our mindset, especially folks in this black and brown space where they do my auto loan, they do my direct deposit. My mama been at that bank for 20 years. Let me go down there and get me a home loan real quick.
right.
That's how it's been for years and years and years and years and years. But just how, like, Foot Locker came about out of nowhere, where people didn't always go to sports shoes stores. Well, now there's a specialized place to go for that niche of what you need. And again, a mortgage professional would help you versus, you know, that's going to a one-stop shop and they do, can openers and they do, TVs and they do, t-shirts, like a Target or something like that. You wouldn't go to Target for a home loan, right? So, but how to stay competitive, because that's really important, especially if you're using down payment assistance. So first and foremost, it starts a lot of times with your lender and your agent,
Right.
right? Being able to make sure they speak on your behalf and let folks know when they see the BFI or when they see what your buyers is truly, they're going to see, they're going to see who you are. And it's up to your lender and your agent to speak on your behalf when you're not there and say, hey, I know you've seen that they're pursuing a program. Well, guess what? That program doesn't add a lot of time and effort to our process. We can still close at X amount of date. They're still a strong buyer. They still got good credit, good job, even if they don't. But we know we can close this loan. But yeah, we are using some extra funding to help us buy. So again, a lot of times it's right on that first level, right on that front line is, hey, look, I have a buyer who loves 222 Main Street. He's a perfect buyer for it. He is using down payment assistance. It may add a couple of days on or not. This is a program I've used a lot. My lender has used a lot. We're comfortable by meeting this closing deadline. Here's we're ready to play ball. So a lot of times it's us on the front line speaking for you, establishing a comfort level for that listing agent, that you're letting them know they have nothing to worry about by taking on this offer because we know we can close by X date. And this is a really good buyer that does just need a bump, in terms of down payment and closing assistance. The other thing is that a lot of times with these grants and these programs, they, as a listing agent, if this is truly all that they need is just the upfront money, but it's a strong buyer, that buyer might actually be stronger than the guy who does have all of it and does seem to have all of the answers, right? Once that listing agent does break down and you fill out a good BFI and you let everybody know who your buyer is, your buyer may have really good credit, really good job history, really good debt to income ratio, but just needs a bump. Sometimes again, listing agents, they may not, really do a deep dive on who's truly submitting an offer. Just because you're using assistance doesn't mean that you're not a strong or credible buyer. Sometimes this down payment assistance can be used to help you not only with closing costs, but also, sometimes people may buy down interest rates and things like that. So the money that you get can be used elsewhere in the process that could help you as the buyer. But a lot of times, I would say it has you and me on our buyer's behalf, and say, hey, look, just because we're using assistance doesn't mean that, we're not worthy of this house. What I know you have something to add. What are you thinking, Khalid?
Well, it goes back, and we probably keep going back to the same thing, is working with agents and lenders who are familiar with these programs. Because if you don't, if I'm on the seller side and I know that this person has some type of down payment assistance, understand that when you go into mortgage underwriting, when you're a first-time home buyer and you're going into mortgage underwriter, that means that the mortgage company is making sure you're adequate to give a loan, to make sure that you're worth giving a loan to. So this is where they're basically processing your information. Well, the down payment assistance people, they have a process also. So there's two processes, there's two hoops that you're jumping through as a first-time home buyer. And if you're not working with individuals who are familiar with the process, then they don't know, for example, the KFIT program that you were speaking about. Now, this is the state-run program, okay, where they give you up to 5% of the purchase price. And they give this to you, but they have a process. At one point in time, their process was like 30 days or 45 days, okay? So if you don't know that, okay, you go and you put an offering on the property. If I'm an agent that knows about this particular down payment assistance program, and I know that they're 60 days behind, okay? So I know that the mortgage company has to do their process. That's going to take maybe 20, 25 days. And then I know that your down payment assistance right now is at 60 days.
Yeah.
Okay, the the average process is 30 to 45 days. I know your process is going to be like 2 months. Okay. And that's if everything goes well. But that's because I'm in the trenches when it comes to the down payment assistance program. So that's why it's vital for you to work with somebody who understands this landscape and is in the trenches with this so they know, okay, we're probably not going to do, for example, in this example, because their timeline is less now, but we're probably not going to do KFIT because if we do KFIT, now we're going to ask the seller to hold this property for 60 days. No, what might be better was maybe might be better to do the Philly first or do a number of other different programs. So I just want to reiterate, and we keep coming back to the same point as far as working with somebody not knowledgeable. Because here's the thing, there's not one place that you can go to find all of the down payment assistance programs. There's not one website that you can go. Number one, they're always changing. Some are closing, like the first front door. They close and then they come back. They close and then they come back. So there's not one place where you can go and find all of the information on all of the programs out there. Okay. There's just not. So that's why it's vital to work with somebody who actually knows about these programs. So in any case, let's move on. My next question is, Chad, can you explain what closing costs are, and if they can be reduced or included in the loan, and are there programs that help with closing costs for first-time homebuyers?
Good stuff. So closing costs are typically fees paid during you when you're acquiring a home loan, right? Typically, like we mentioned, anywhere 2 to 3% on the high end, maybe 6%. But their fees, excuse me, like attorney fees, like title insurance, like appraisal fees, like recording fees, because the transaction is transaction. Your home buying process has to be recorded on a city, a county, and a state level. There's lender insurance and title insurance and so many third party fees and costs that go on behind the scenes that Khalid, myself, and our buyers typically don't think about. But there are fees and costs that do exist and they do have to be paid and they will be paid by you, the buyer, right? And so when we talk about, title insurance for saying where, sometimes title insurance and certain things seem like they're optional, right? But title insurance ensures that the buyer is purchasing a home that is clean and free of any liens, titles, or judgments, or things like that. That's one that you don't want to leave out. So title insurance, something that again gets put in that hodgepodge of different costs, fees, and third-party services that ensure a smooth transaction for you. And most often, Khalid or nor myself know where to go to record your transaction. Right? I don't know anything about that stuff. I don't know anything about the attorney fees, but I do know that that 2 to 6% range covers a lot of different services and third party things. And just like me, I like to get paid from any service that I render, regardless of whether it's mortgage or whether I was, basket weaving, right? And I made some baskets for the community. I'd like to be paid for making my baskets, right? You want to be paid for your thing. So, you know, there's a number of services that get done during a home buying transaction that simply, if you Googled, you'd see the long list. But all of those folks that are doing those things need to get paid, and you as the buyer paying for them, right? Now, those closing costs can be, paid for, whether you can use your down payment assistance, right? And so if you were buying, let's say, a $200,000 property and you were using the KFIT, we keep harping on that one, 5% is what? $10,000? Is that my
Mhm.
math right? 200,000, $10,000, right? $200,000 property buying in PA may be 18,000. Well, the state just gave you 10. Congratulations, right? At $10,000, could you be used to pay your closing costs or your down payment? They don't really divvy it up, but they just know at the end of the day, this thing costs 18 grand. So here's 10. That 10 would be put towards your process. And again, the money you're bringing to your closing is a combination of down payment and closing costs. And when you put them together, that's why I was kind of come up loosely with the number of 8 to 10% of your purchase price is typically your down payment and your closing costs kind of fused together. And that's what you, the buyer, brings. And so when you ask, can those costs be paid for? Well, a down payment assistance can help pay for those things. We also know sometimes the seller, if they're feeling generous, and something I mentioned the other day on my social media was that experienced lenders and realtors will let the buyer to be open or flexible to looking at properties that may have been sitting on the market for a while, right? Because we know, and Khalid just ran this play this week, where he was able to secure an extra, really nice seller credit because the property had been sitting, and so a lot of times we'll see motivated sellers be more willing to give you something, whether it be repairs or a credit towards something that, again, may need to be fixed, or hey, here's help towards your closing costs, right? Because that could be truly the one thing that's stopping you from going from renter to buyer is the upfront costs. And so a lot of times sellers may be able to provide help towards our down payment or our closing costs. And so again, closing costs, roughly 2 to 6% of the purchase price, third party fees and services. Again, we can use down payment assistance, or we can even use help from the sellers.
Gotcha. And again, just to reiterate, um, when you're looking to buy a home, like Shad said, you have the down payment and you have the closing costs. Okay. And sometimes these are interchangeable when you're speaking with your lender or whether you're speaking with an agent. All right. But these are monies that you're bringing to the table. So some of the down payment assistance can be used for your closing costs or your down payments, but there are some down payment assistance where they can only be used for your closing costs or they can only be used for your down payment. So
Yes,
that's why it's
it's a good
important
point.
to work with individuals who are experienced in working with this because they'll know, okay, this one you can use for either of them, like it's like an all purpose, or you can only use for your down payment, and this one you can use for um, your closing costs. So the next question that I have, and we'll wrap it up with this, is and this is very important, is Shad, how does a home buyer's credit score impact their eligibility for these low down payment loans or forgivable loans and down payment assistance? And what can the person do? What can the home buyer do to improve their chances of qualifying?
Good question. So, you know, once again, no program is the same, right? And so we know there's thousands of programs across the country geared to help first-time buyers or any buyers. Sometimes you don't even have to be a first-time buyer, right? But any buyer looking to buy a home. here's certain programs, right? And all of those programs have their rules. And, I keep a database for, because I'm licensed in 39 states. Some of them active, some of them aren't, but I do a lot of national business. And so I have a matrix of here's the main programs, here's the criteria, right? And like a spreadsheet almost of credit score and, income limit. And is this one about household size, right? Or is this one about income that the person makes? Um, I mean, there's so many different real nuances to a lot of the programs. Many of them are credit based. Some of them aren't. If you're watching this and you're looking to buy in Philadelphia, well, the Philly First grant has no credit score requirement. So you can have a 580. If you can still get a home loan at 580, well, guess what? And more than likely, as long as you meet the income requirements and DTI requirements, you can use the Philadelphia First home grant. So that one gives up to 6% of the purchase price up to $10,000. That one doesn't have a credit score requirement, but others may have a 620. Some have a 640. Some have a 660, right? And so, one, the big thing is just knowing, right? Having the awareness of what's required of me. Your lender should help you there, right? What do I got to do to get this program? And then, two, the next thing is, all right, well, what if I'm only a couple points off? Now that you looked at my credit report, is anything the lender can provide, in terms of guidance of what to do to help beef those scores up a couple points so they can get the program. Sometimes you may be really far off and you may need credit repair, credit help to bring, in one of the big guns. But it's knowing and having the awareness of what's expected of you, what's asked of you, then seeing where you stand. When I pull credit on a buyer and they're buying in Pennsylvania and they're 660 or above, I'm already like, they may not even said anything that they need money, right? But again, as I mentioned earlier in the call, your money is best in your pocket. And I'm already thinking like, I can't wait to share with them that they could possibly use a program. Because I know usually a lot of times the credit score can keep people away from the programs. It's not the money, because often the income limits might be higher than what you're already making. It's the credit score that keeps you away. And so once I know in my mind where they're buying, and then I see their credit score, I'm thinking like, oh, there's a couple programs I can't wait to share with them, because I know often it's the credit, not the income, right? And so, typically they want to make the income limits lower. Unfortunately, they don't always make the credit limits lower so more people can use it, but knowing first what the eligibility requirements are for that program, and then having a loan officer or an agent that can help you say, okay, so here's the line in the sand. This is what we got to do to get there, right?
Gotcha, man. Well, we're gonna wrap it up with that, man. Shad, let them know where they can find you at.
All right, so I'm Shad Hammond, team leader Loan Depot. That's the company I work for. I'm actually corny enough to wear their jacket today. So I'm Shad Hammond, team leader Loan Depot. I am Shad Hammond on most platforms. I'm Shad Knows Loans on Instagram, Facebook, Shad Hammond, LinkedIn, Shad Hammond, Snap, Shad Knows Loans, and usually pretty easy to find.
Gotcha. And I'm Kyle Nathan Alim, the real estate boy. And if you're looking to buy a home, sell a home, or invest in real estate, I got you. You can catch me on anywhere at Real Estate Boy or Khaled Nathan Alim on all social medias. If you need to reach out to me, 267-930-1249. And again, if you do know anybody that's looking to be a first-time home buyer, again, I'm starting this Black and Brown Home Ownership Initiative because I want to see more of us buy homes so we can participate in the equity building and start owning where we live at versus renting, man. I see y'all on the flip side.
I love
Thank
what
you
you're doing,
so
man. I
much.
think this is
Thank you
impactful. Good
so
stuff.
much. Thank you so much.
No problem. Take care.
Bye bye.